Gold's surge in August was nothing short of remarkable, soaring nearly 5% and marking its best monthly performance in 4 months. But here's where it gets controversial. The rally isn't just about market fundamentals. It's also fueled by political drama and shifting expectations around Federal Reserve policies. Let's unpack why gold has captured so much attention lately. A complex mix drives gold higher. Gold, represented by XAU-USD, climbed about 1% on Friday alone, closing at $3,447 per ounce. This pushed its total gain for August to an impressive 4.8%, the strongest monthly increase since April. What's behind this momentum? Recent U.S. inflation data played a key role. The Personal Consumption Expenditures, PCE Price Index, a favorite inflation gauge for the Fed, rose 0.2% month-over-month and 2.6% year-over-year, both exactly in line with economists' forecasts. Core PCE, which excludes volatile food and energy prices, also matched expectations with a 2.9% annual increase. These steady inflation readings have kept hopes alive for a rate cut in September, making gold, which doesn't yield interest, more attractive to investors. The dollar's decline adds fuel to the fire. August saw the U.S. dollar index drop by 2.2%, reversing July's 3.4% gain. A weaker dollar means gold becomes cheaper for buyers using other currencies, naturally boosting demand. But there's more to it. When the Fed signals potential rate cuts, the opportunity cost of holding gold decreases because investors earn less from interest-bearing assets. This dynamic makes gold shine brighter in a low-rate environment. Although the dollar held steady on Friday, its downward trend remains intact, giving gold traders confidence to stay bullish as September approaches. Moreover, the combination of a softer dollar and easing inflation strengthens the case that real yields, interest rates adjusted for inflation, may soon shrink, which historically benefits gold prices. Political turmoil at the Fed, the Lisa Cook controversy. Adding a layer of uncertainty, former President Trump's move to dismiss Lisa Cook, a Federal Reserve governor appointed by President Biden, has stirred debate about the Fed's independence. This political tension has injected a speculative edge into the market, prompting some investors to seek safety in gold. On Friday, a court hearing on Cook's request to temporarily block her removal ended without a decision, leaving the situation unresolved and investors cautious. The key question now is whether this turmoil could fracture Fed leadership or undermine confidence in its policy decisions. If so, gold demand might accelerate even further as a hedge against instability. Watching the charts, is it a double top or a breakout? Technically, gold's recent rally has brought prices back to a crucial resistance level, matching the peak seen on June 16th. Traders are closely monitoring whether this level will hold firm or if gold will break through and continue climbing. Friday's price action showed a rejection at this resistance, hinting at a possible double top pattern, a bearish signal where sellers try to push prices down after 2 failed attempts to rise higher. If this pullback is confirmed, gold could retreat to the 3,380 to 3,400 support zone. On the bright side, gold remains comfortably above its 50-day, 100-day, and 200-day moving averages, which are key indicators of medium and long-term strength. On the flip side, a decisive breakout above the June highs could pave the way for gold to challenge the 3,500 mark, especially if the Fed's September meeting confirms a shift toward lower interest rates. This scenario would likely ignite fresh buying interest. So, what do you think? Is gold's rally sustainable amid political drama and Fed uncertainty, or are we on the brink of a correction? Could the Fed's independence be at risk, and how might that impact markets? Share your thoughts below. Let's get the conversation started.